Hello everyone, my name is Gregor and welcome to our new video Surfing the Elliott Waves, where I'll look some of the most interesting developments for this week. This video has been brought to you by Orbex. I would look at crude oil, dollar index, 10-year US yields, AUDUSD, dollar Mexican peso, and also we'll take a look on gold. Now, as you know, today we have the very important data release. It will be US inflation report, so expectations is that inflation will come out higher at 3.6%. The previous reading was 3.2. So it looks like that market believes that inflation is still not coming down. In fact, the Fed could potentially look for further hikes in upcoming meetings, and that's why we have seen a pretty strong rebound on dollar over the last few weeks. One of the main concerns why the inflation could stay here is also higher energy prices. Keep in mind that crude oil has recently seen a very strong move up from what that was low around $70-80 per barrel back at the end of August, and now we are already approaching $90 per barrel. So that's a pretty strong move to the upside on crude oil. It's also due to the cut of productions, especially from Saudi Arabia. So higher energy prices obviously means that inflation, this will have an impact on other costs, and of course inflation could tick even higher, and that's why we are seeing currently the positive correlation between crude oil and the US dollar, because there is speculation that interest rates should go even higher, and that's why we are seeing move to the upside on US yields, which has a positive impact on the dollar with higher energy prices. However, as you can see, that's also the positive correlation visible here from August lows, where I have crude and also dollar index. Okay, and now the question is how far crude can go. Well, I think that we have actually a very nice potentially 5 waves up. So these 5 waves up could be now in a very late stages as the price approaches this $90 per barrel, very strong psychological level, and also this comes in at the upper trend line of this Elliott wave channel. So I think that market could slow down a bit because after all I can even count 5 subwaves up from that 78 area. So we have 5 waves within a higher degree, wave 5, meaning that clearly there can be some slowdown. Also, current price is coming out of a triangle, and we know that triangles occur prior to the final move within the higher degree trend. So this leg up is then the final move, final leg before again market could potentially slow down. So watch out for potentially a reversal. Also, even the inflation data will come out strong, okay, let's say above 3.6%, let's say 3.7, 3.8, who knows. The dollar, of course, firstly will see a strong spike to the upside, but then eventually it could slow down, because keep in mind that a lot of inflation figures can already be priced in to the market, because US dollar already rised, dollar index, rised around 6% from summer lows. So clearly this can be buy the rumor, sell the news impact. So even if deflation would be strong, at some point we could see dollar touching and reversing down from resistance. And now, since we mentioned the dollar, let's take a look here on the 4-hour time frame. Notice that here we have 5 waves up, potentially now trying to find some intraday support here, as you can see at the former swing high around 104.40. So possibly, as long as we are above that level, there is a chance for another push to the upside. There is a resistance at March highs of this year. It's very close to 106 area. So I think that we are running here into the very late stages of this recovery. So as I said, dollar has seen a pretty strong move to the upside, but even if deflation numbers will be strong, there is still chance that market will reverse to the downside at some point. But of course, I'm looking for another final push to the upside. I really do not believe that important data like the US CPI will allow traders to be short with tight stops. Normally market will try to play on the both sides to clear out stops before the real direction can be found. So in my opinion, there can be a spike to the upside and then a reversal lower. Of course, for a change in trend, let's say for a correction or even some bearish impulsive drops, you definitely want to see this Elliott wave channel support to be broken here around 104, if not lower. Okay. Also, the big picture We have few different wave counts. As you know, the first and the primary is still that we are here in ABC recovery, okay, but wave A is now at the resistance, so wave C could climb then much higher after a wave B drop. But even if wave B drop will show up, still you should see some weakness here, okay, so 103 could definitely then be in the cards. Now another interpretation is that maybe this first 5-wave cycle has already ended here in February rather than here in July, and that since February then we have a potential flat formation. So in such case you are already approaching this resistance, okay. So no matter how I look at it, in either case I think that this resistance here for this month is going to be very strong, 105, 106 area, okay. So if you're looking for dollar longs, of course there can still be some room left, especially when you look at and considering that the US yields here are missing the final fifth wave here, okay, to complete the higher degree structure, or maybe that AUDUSD is still in downtrend. Keep in mind that this is the sideways price action. I know that we have reached a new low. By the way, we were looking for this new low to happen already a few weeks back, but since the recovery is very slow, not really impulsive, I just think that we have to stick with the downtrend and be aware of further weakness here. So another leg to the downside, maybe even from this triangle, is very possible, if not probable here. On the upside, of course, I will stick with the bearish trend as long as we are holding these prices below the resistance line, okay, the upper line of this base channel. If this one is broken, then I think significantly, of course, and we see a daily close above this swing high here that goes back to August, so 65.20 around there. If we see a daily, even better, maybe a weekly close above that level, then I think that bottom after all could be forming. But for now it's still a little bit too soon to say so. Now let's take a look on gold. So gold is also coming lower, but if we firstly look at the 4-hour time frame, so gold is also coming to the downside, and it's approaching some support here around 1900. There is a spike swing low here back from August 25th. I'm not really sure what happened back then, but really this could be some interesting level. Keep in mind that that's also very close to this whole area here. If you look back even from June, you can see that that was clearly a very strong super zone. So I think that if we are in a running bearish triangle where wave B, by the way, can move to a new low, then of course more weakness will be seen on gold, but after a wave E rally. So I just think that maybe this slow price action here in this big summer range could resume, okay, but eventually at some point I will be looking for more weakness down into wave C. So I still think that gold could see much lower corrective pullback when looking at the whole price action away from May highs. So this can be then a 3-wave drop against the previous 5-wave rise. So higher degree trend is up, but in the short term I think we just either stay sideways to complete this triangle in wave B, and then even more weakness towards 1800. So big support zone for this year, or I could say maybe a pivot level for gold, is going to be around 1800. This is also where was the former wave 4 and the 61.8% retracement of that move. Now the final market, let's say that dollar would really see a significant reversal to the downside after completing these final legs. The pair that I would pay a lot of attention on is definitely dollar Mexican peso. Keep in mind that dollar Mexican peso has been a pretty nice carry trade here, so over the last few months, if not 2 years. So I think that this downtrend still is very valid for more weakness. Keep in mind that I'm tracking bearish impulsive interpretation away from that was from 2021 December highs, November. So I'm thinking about more weakness because recently recovery here, while the US dollar index has seen a pretty nice bounce over the last few weeks, even dollar Mexican peso has made a 3-wave rise. Okay, but keep in mind the dollar index, as I said earlier, is moving into this 105, 106 potential resistance area. So if that resistance area will prove to be a very strong one by the end of the month, I think the dollar Mexican peso could see much more weakness because dollar Mexican peso is still in a downtrend. Okay, and we are already seeing over the last few days some reversal to the downside, even when other dollar pairs, or I should say other currencies, are looking weak versus US dollar. The dollar Mexican peso is already trying to find resistance here. Okay, so I think that more weakness could be seen. Of course, I'm curious to see the response to US CPI data. If we see suddenly another leg to the upside, the intraday rally, then watch out for new resistance at 17.90, 18 area. That was the previous swing low. That swing high also is the channel resistance line. Okay, so I think that sooner or later still dollar Mexican peso could resume lower into wave 5, because we have a free wave rise, and if you compare the current rise, or I should say not rise but bounce, to the previous correction here of the same degree, you can see that they are pretty similar, which is the case very often when you have the extension here in the middle. Okay, traders, thank you very much for your attention. I hope that you enjoyed this video, and talk to you soon.